If you have been watching the screens this week, you know the market just experienced a seismic shift. We are tracking a massive dual-pronged institutional rotation that is catching retail investors completely off guard. First, the US jobs report just posted a shock 23,000 miss, almost killing the September rate hike and sending a massive green light to risk on capital. But the real story that the mainstream media is missing is happening in the physical commodity markets. We are seeing unprecedented sovereign wealth accumulation in gold and a sudden strict export ban on critical metals out of Africa. Today, we're tracking exactly how the smart money is deploying billions into massive mining breakouts while quietly consolidating positions in software and global macro alternatives. I think it's important to discuss the bombshell that's been dropped on the markets on Friday, which is the non-farm payrolls. There was a forecast of around 80,000 additions, however the actual result was minus 23,000, with the negative revisions revealing a weakening US labour market, which is a sign that the labour market had not stabilised after 4 months of positive growth, which comes against a complicated economic backdrop, with the war not looking like it's easing up, thereby increasing the confidence that the current target rate will be kept in September. As you can see from just a week ago, there was a 70% chance of a rate hike, which has dramatically reduced to 43%. Now if we start with the elephant in the room, it's precious metals. And if you're wondering why tickers like GDX operating in the materials sector just exploded up by 21% on the week, you have to look at sovereign wealth. It's clear that central banks are currently still buying gold, with JP Morgan global research analysts expecting gold to push to $6,000 per ounce. UBS are also suggesting that gold could stage a rebound, expecting gold to move towards $5,000 per ounce over the next 12 months, with them even suggesting that central bank demand remains a critical pillar of support. JP Morgan's research also says that the amount of gold purchased in the first quarter of 2026 actually increased over the fourth quarter of 2025, with at least one buyer appearing to be China, but appearing to be systematically building gold reserves as part of a long-term project. JP Morgan also indicate that we have seen the price floor. China's top 10 insurance companies received regulatory approval to allocate up to 1% of their assets under management to physical gold, and industry watchers believe the 1% cap could just be a starting point, and a 5% allocation could be on the cards. And on my ETF screeners and my individual stock screeners, I'm seeing a bunch of metals and materials come up, with GDX gapping up and closing above the cloud, which I think is fine for an entry, as lagging span is above price and the cloud has just turned bullish. And I realized that GDX is a gold miner. The miners allow you to capitalize of more explosive moves than trading traditional gold. But this is a gold ETF, for example, and it's flagged up on the screener as well as IAU and GDXJ, which looks similar to GDX and could be a viable trade if you want to take even more risk. GDXJ seems to have broken out of its diagonal and the bullish twist is imminent, with lagging span being above price. CGAU, which is Centauro Gold, flagged up on my individual stock screener, clearly because of the wider catalyst going on, but it is a valid base breakout, with price looking to have closed above this neckline here. Lagging span is above price and the cloud is bullish, and the conversion line and the baseline are pointing up, indicating strong upwards momentum. Now the metal squeeze doesn't stop at gold. We're seeing massive downstream bids catching PPLT, which is platinum, SILJ, which is silver junior miners, and XME, which is the broader metals and mining ETF. These all sit firmly within the materials sector, however have not broken out above the cloud, but they're all close. And if you're wondering why there is a sudden surge, and it's because a massive supply shock just hit the base metals market. As you can see here, Congo bans copper and cobalt concentrate exports as copper prices spike. And this ban on exports is effective immediately. They're effectively drawing a line in the sand, forcing intermediate processing and smelting to happen domestically. However, as the ban takes effect immediately, there is a 1-year export waiver which may be granted in strategic circumstances. And when the supply is artificially restricted, institutional capital has no choice but to bid up the existing mining assets to secure their allocations. And this has been confirmed on our screener. I wonder whether this will affect the current AI trade, as copper is a material that's used in the semiconductor and data center build out, and with Congo being the second largest producer of copper in 2025. While I will look at the indices in just a moment, if we just look at the heat map for the entire stock sector, it's pretty much green all across the board, apart from energy and maybe the utilities sector. But you can see from the 1 week performance that it was the basic materials that outperformed the most, followed by tech. We've had a breakout in the S&P 500, however, due to the depth of the consolidation, the projected target isn't very high, and so I wouldn't get overly bullish just now. And with the S&P closing up at about 3.5%, the Russell managed to almost echo that at 2.3%, so generally the average stock had a good week. The Nasdaq does look a little bit different, however we've recovered from the lows here below the cloud. and we're now looking to see if this is a bullish consolidation. This time the Nasdaq looks completely different to the S&P 500, and I suspect that's due to SpaceX dragging it down. Semiconductor seems to have confirmed this as a low for now, but we're still below the cloud. However, it looks like we're starting to see some kind of divergence from the Korean markets. We've discussed software last time and it's looking like it's seeing some follow through. Everything about this chart is bullish apart from the cloud. I'd be careful about saying this is a long-term trend as there is just so much overhead resistance here. For the time being though, the setups remain valid, and I gave a bunch of setups in last week's video. However, this week I just want to say that it's looking like we are seeing an institutional bid as we've closed at almost 9% on the week. The Mag 7 is telling a similar story, however it's closed positive of almost 5%. The difference here is that there's not so much resistance overhead, and I wonder whether we could be seeing a breakout in the Mag 7. The daily looks good so far, however I'd wait for a break above this neckline. Lagging span is above price, and the cloud is bullish. It's flipping from bearish to bullish quite often, so I'd be careful about treating this as a signal. Moving on to my ETF screener that's purely focused on setups, not volume. IHI showed up, which also did flag a few weeks ago, and it's now looking like we're seeing some follow through. If I was trading the ETF, however, I'd wait for a close above this neckline. But everything on this chart is bullish, with lagging span being above price, cloud being bullish, and price being above the cloud. And I've gone through some of the holdings a while ago, but there isn't anything in here that seems to interest me for now, so I personally probably would trade the ETF. XRT came up a few weeks ago as well, however it looks like we've had one failed breakout at this neckline here, so if I was trading this ETF I'd probably wait for new highs above here. There are a couple of setups within the XRT ETF that I'm watching. Home Depot is one of them. It looks like we have a neckline around this region here, with a close above it being valid for an entry. However, I'd be careful about taking a trade so close to earnings. There's recently been a bullish cross, but lagging span at the moment is touching price. There's Best Buy, which doesn't look like it's doing much on the weekly. However, I'd be interested to see if we can close above the Kijun again. I mentioned Chewy in one of my previous videos. It has now broken above the cloud, with the future cloud being bullish, and lagging span being above price, but not above the cloud just yet, and a decent target projected ahead. CART, which is Maple Bear, looks to be breaking out of a diagonal and looks to be breaking out on significant volume with a huge wick at the bottom. And finally there's TSCO, which was brought up before as a potential trade returning to the baseline, and it's had a plus 12% this week. It's showing signs of a turnaround, with the cloud being bullish, lagging span being above price, and price almost closing outside of the cloud. XLF is still there as a setup on the screener as well, and there's nothing wrong with this chart just yet. And then the last one is IGV, which we have already discussed. While the turnaround volume screener was riddled with metals, there were a couple of other setups in there, however they just represent the total market. DYNF was one of them, and it had a break above the neckline just last week. However, the top 10 holdings, which represent almost 42% of the total assets, are basically the Mag 7 and some financial stocks. And similarly, DFAI also had a breakout. However, the majority of the holdings here don't interest me, but looking at the distribution, they're heavily skewed towards the financial services sector. And ASML is maybe one that I'd be interested in, but it just doesn't look like there's a trade there for me. I thought I would give you a bonus section as well with a bunch of stocks from my individual stock screeners. There's Doku, which has just broken above the neckline here. Lagging span is above price, and price is above the cloud, with the target for this consolidation being some ways away. However, there's some overhead resistance in this zone here. CGAU, which was covered earlier. 5.9, which is closed above the weekly cloud and has a bullish future cloud, looks to be breaking out above the neckline here, with extremely strong momentum marked by the Tenkan line and the Kijun lines pointing up. Lagging span is above price, and the cloud is bullish, and there's some ways to go until we get to the target. Fast also seems to be breaking above its neckline of a consolidation which looks like it seems to have taken almost a year. Lagging span is above price, and the cloud is bullish, and with this being at all-time highs, we have no overhead resistance to worry about, and the target is quite significant. Alpha is also closing above the neckline here, with lagging span above price, and the cloud being bullish. There is some ways to go until we get to the target, but we just have to be mindful of this overhead resistance here. And if you found any value in today's video, please like, comment, share, and subscribe.